E-mini S&Ps see another big push lower. It all started last week when we saw that Friday trade hovering at around 47 going into that trade. This week we got as low as 4,500, so a big move lower in a short amount of time. We did see a bit of a roller coaster ride. It didn't happen all at once. Last Friday we saw a big move lower. Monday we recovered. Tuesday we started to head lower, and then we end the week on today's weaker than expected non-farm payroll number, and uncertainty from the Fed takes us down just above the 4,500 level. At this point, stocks right now are kind of waiting for some confirmation, whether it be this growth versus inflation argument, whether the Fed's going to act aggressively or going to have to pull back a little bit, given the fact that the non-farm payroll number wasn't as strong as they'd hoped today. We'll all have to wait and see. But ultimately, equities right now seeing a bit of a push lower. E-mini S&Ps are down 5% from that all-time high we saw just recently. So again, we aren't seeing a critical, we aren't at critical mass levels yet, but we are seeing a big push lower, and that continued this week. Now, what does this mean for volatility? Well, the volatility index that we watch is up at its highest level that we've seen since January. So obviously we are in the red line area on volatility as we see this big pullback. It's led by technology shares that have been outperformed over the last year or so. At this point right now, volatility, a good barometer of the fear that we're starting to see in the market. We have seen this happen a few times this year, seeing this VIX index getting north of 30. It doesn't happen very often, but when it does, it catches everyone's attention. It also doesn't stay there very long, so it'll be interesting to see if we get an extended period above 30 on this recent move. Lastly, what do we have next week? Well, next week brings CPI, a concerning number being that it's been so high. One of the reasons we heard from Mr. Powell this week, he talked about inflation maybe not being transitory, and the CPI that we've seen north of 6% might be one of the reasons why he suggested that. We also get the Michigan sentiment, and we'll also be looking forward to that mid-December FOMC meeting. Will the Fed be upping their tapering? Will they increase their tapering, given the fact that the growth numbers aren't where they want to be, but inflation continues to go higher? Or will they maybe take their foot off the gas a little bit and continue on this path at least into first quarter of next year? The market wants some questions, and right now the weakness that we're seeing in the equity market may be reflective of the Fed's uncertainty. Markets like a certain Fed, whether they're doing raising rates, lowering rates, or doing nothing, they want a Fed that knows what it's doing. And right now the market, it looks like it seems, might not have a whole lot of confidence in what the Fed has said, at least this week. Next week's another week, and obviously we'll get a lot more answers on that mid-December FOMC meeting. So equities heading out on the lows, 5% from those all-time highs that we just recently saw, as we continue to see fears of growth versus inflation and an uncertain Fed.